Good morning, winners. Welcome to G'day Crypto, your home of the crypto news with the fast facts. A couple of things driving the crypto narrative today. A couple of pretty big price predictions about Bitcoin. Strange turn of events. Grayscale is suing the SEC. Really interesting. A couple of smaller articles as well that we need to get into in regards to CBDCs. We'll get into that. First, the housekeeping. You can see we're at block height 798,157. Local time now, 6:02 a.m. here. Market up 1.4%, 1.24 trillion. Looking nice and healthy. Bitcoin nice and strong. Just had a big wick up. Woke up as 30,500. We are sitting at 30,844, up 2% in the last 24 hours. And look at that. How nice. 24-hour high, 30,862. Pretty much on that now. 24-hour low, 29,988. Good news has hit the market. Ethereum 1902 up 1.9%. Another big jump up. And this isn't anything yet. We're just getting started. 2% in a day is absolutely nothing. Wait till after the halving. Obviously, this video really quickly is not financial advice. And thanks very much for subscribing. When we get after the halving, 10% moves in 24 hours will be nothing. But it is exciting to see nonetheless. In the so the Ethereum price, 1902, the high in the last 24 hours in 1906, we pretty much just hit it then. 1848 for the low. You can see the banter bubbles, everything here is looking good. Even Hex, if anyone still invests in Hex, are you going to hold on to it or are you going to cut your losses? Would be my question. Let us know in the comments below. G'day to Maniac and Baseline Benny. Maniac, sorry for your namesake, mate. It sounds like there's been a little bit of drama in regards to that. Been out of that for a long time. Happy for you guys to keep me informed. Now, Standard Charter, pretty big bank. They've upgraded their Bitcoin price target, which is good to see. We'll read this, and they may even be thinking a little bit small. Price targets, they're irresponsible. It'll be what it'll be. Little bit of fun. So, a couple of things here. Bitcoin, the world's largest cryptocurrency by market value, could rise to $50,000 by the end of this year, and up to $120,000 by the end of 2024. This by a report. The bank put their resources into producing this report, spent time and money to figure out where they think Bitcoin's going. They need to be conservative. They're a bank coming out with 50,000 of the year, 120,000 end of 2024. Pretty cool in my books. We now think that this estimate is too conservative. This was their $100,000 when they predicted that in April. $100,000 too conservative, and we therefore see upside to our end 24 target. The report cites increased Bitcoin miner profitability as one of the factors that will drive the price this time. The rationale here is that as well as maintaining the Bitcoin ledger, miners play a role in determining net supply newly minted BTC. Increased miner profitability per Bitcoin mine means miners can sell less of the output while maintaining cash inflows, reducing net Bitcoin supply and thus pushing the price higher, according to the report. So that's 120,000 by the end of 2024. Some people are calling, I'll leave the not financial advice up there. Some people are calling for as high as 300, 400, 500. Are starting here about 600,000. All of that is hopium. The price will be what it'll be. It's going to be higher than what it is now. If we're going to 120, 100,000 worst case scenario, happy days, eh? So it'll be interesting to see come the end of next year, even the end of this year, where we're actually at. This is pretty funny. I had such a good laugh when I read this morning. Grayscale argues leveraged Bitcoin futures ETF approval shows spot ETF should be approved. The crypto asset manager is suing the SEC for rejecting its Bitcoin ETF application last year. Like a jilted lover, lawyers for Grayscale criticized regulators on Monday for approving a leveraged Bitcoin-based ETF amid the company's lawsuit over the US SEC rejection of its own spot Bitcoin ETF application, according to the letter the company tweeted. It's not happy. While the commission could theoretically correct its discriminatory treatment of spot Bitcoin ETPs by rescinding its approval of all Bitcoin-based ETPs, the commission's apparent willingness to permit even a leveraged Bitcoin ETP, a particular high-risk version of a Bitcoin futures product, makes it clear it has no intention of doing so. They really sound like they've had a little bit of a tryst, a little bit of an argument. Now, the SEC rejected Grayscale's application to convert its Grayscale Bitcoin Trust, GBTC, into an ETF last year, prompting the company to file a lawsuit against the regulatory agency, alleging a violation of the Administrative Procedure Act. The DC Circuit Court heard arguments from both parties in March, and a ruling may come by the end of the year. Slow and steady, anything with courts, and costs a lot of money, but I thought that was a little bit funny. They seem pretty pissed off at the SEC. In all seriousness, a leveraged ETF, fair enough. It's irresponsible for them to approve that before a spot market. The BlackRock ETF is obviously coming, it's just a matter of when. CBDCs, we haven't talked about these for maybe 2 weeks even, which is a long time in crypto. And I think this is a pretty good perspective because with CBDCs, they came into the news real mainstream. Australia is still trialing theirs. It gets implemented October this year, I believe, but not for retail. And there's this argument we'll get into. CBDCs are coming. We need to be aware of them, know what's coming, but probably not worry and get caught up with it either. Never as good as we think it is, never as bad as what we think it is. Probably everyone watching this doesn't think anything good about CBDCs. They will be a little bit faster. Yeah, I don't know. I can't think of anything good for them. I'm not going to back up CBDCs. That's not me. So 15 retail CBDCs likely by 2030. 93% of central banks worldwide were engaged in digital currency work in 2022. Likely by 2030. That's still quite a while away, 7 years. So they will come. It'll happen slowly, then suddenly. Of the 86 central banks surveyed, 93% are undertaking CBDC work. Global work on CBDCs has made further progress since last year, the report said, with the work particularly intense in emerging economies, where it's seen as a way of helping unbanked people. If issued, retail CBDCs can be expected to complement and coexist with other domestic payment methods. At the end of the day, long term, I highly doubt that. They'll push cash out, they'll push everything else out. CBDCs only. Or if you're buying things with Bitcoin and they allow you to self-custody your Bitcoin, at least they know that you've used those CBDCs that were issued to you to buy Bitcoin. They'll be able to track everything. Never fear, ladies and gentlemen, big brother, big government is here. So the previous BIS survey published May 2022 found the burgeoning private crypto market had spurred central banks to look at their options, and in some cases, enthusiasm may have cooled following the 2022 crypto crash. Maybe we need to give props to the likes of FTX for crashing the crypto market, because it slowed down CBDC's implementation of it. So well done, Sam Bankman-Fried. Said nobody ever. But that's what they're implying here. I thought you'd find that kind of funny, or at least I did. So the number of central banks saying they're unlikely to issue a CBDC anytime soon has risen over the year, with fewer now sitting on the fence, the study found. A couple of other things. Bitcoin holding strong. Bitcoin's obviously holding really strong. I'd just like to refresh and see what it's doing while we are live. Wow, it's going for 31. It's happening right now. How fun. What a way to wake up and start the day. So obviously Bitcoin steady above 30,000, and this may lead to where a couple of reasons why it's pumping. Also, where we're heading, you know, like we've come up with that $50,000 price target, maybe a little bit low. We'll keep getting into these things. So Bitcoin steady above 30,000 as China factory deflation suggests and a global tightening cycle is near. China is exporting deflation across the Western world. Ultimately, this will be good for risk assets as it relates to the end of the global interest rate cycle, one observer said. Bitcoin steady above 30,000 Monday as producer price index data from China suggests that the global liquidity tightening cycle that kicked off early last year and roiled risk assets, including crypto, is nearing its end. This is important longer term. So China's PPI, a measure of factory gate prices, fell 5.4% year on year in June, the 9th consecutive monthly decline and the steepest drop in 7 years. It is likely to lead to lower export prices and deflationary pressures in the global economy. China is exporting disinflation across the Western world. We're seeing it reflected in producer price inputs, but not yet fully feeling it feeding into consumer prices. Ultimately, this will be good for risk as it relates to the end of the global hiking cycle, which is good. I think we've all had enough of that. The fastest in history, in at least recent history, it's been insane. It's been an interesting time in the markets, ladies and gentlemen. If you've been around through the bear market, obviously you know all of this. So well done, pat on the back, you deserve it. Everybody thinks holding Bitcoin in particular is easy through the cycles, but it is so volatile and so much happens in between, and banks are collapsing and the whole world is falling down around you. Some ways you feel great and you know that you've got Bitcoin, and other times you're like, oh, I didn't expect that drop, but you get rewarded when you zoom out. So the US 10-year Treasury yield rose to a 4-month high of 4.09% last week, with the 2-year yield hitting the highest since 2006. Friday's non-farm payroll report showed a slowdown in job creation in June. The jobless rate dropped alongside an unexpected increase in average hourly earnings, keeping yields on a higher path. Higher bond yields tend to reduce the flow of money into risk assets. Yields may turn lower if Wednesday's US CPI data shows a continued slowdown in the inflation rate. It's what everyone will be watching. Coinbase knew it may have been violating the law prior to the SEC's lawsuit, regulators claim. I think we know this already. Just a couple of things here, just this one paragraph. The regulator filed its response to a Coinbase filing, which argued that the agency does not have sufficient jurisdiction to bring a lawsuit against it. The SEC, they sued Coinbase a month ago, alleging it was operating as an unregistered broker, clearinghouse, and exchange. Siri's bloody talking to me. All in one go, having listed at least 13 different cryptocurrencies that are unregistered securities. In Friday's document, the SEC said that it would oppose any motion for judgment Coinbase might file, and asked the court to strike Coinbase arguments that the suit violated the major questions doctrine and other concerns. Two things. Siri is scary when you don't summon her. She's amazing when you do, so I appreciate that. In regards to Coinbase SEC, this lawsuit's going to go on for years and years and years, most likely. It's not going to be settled overnight. So it'll be what it'll be. It's no point getting hyped up or about it. Like when we look at XRP, eventually it will be resolved. In the meantime, you just need to invest accordingly and be aware that things can happen, especially if you own their shares. Really quick article here. CPI meets low Bitcoin supply. Bitcoin is proving everything is bullish, but the Bitcoin price action this week. So this article was written, I can find out exactly when it was written, a day or so ago. All the metrics were bullish and the price needed to catch up, and it looks like the price is catching up in real time. Let's just have a look and see. So close. It's gonna hit, probably if you're watching this later, we'll be above 31,000, more than likely. Okay, so external triggers are back for risk assets with a slew of United States macroeconomic data releases combined with multiple speeches from Fed Reserve officials. Well, just the main things in here. It is time to play defensive for a while. The bull market is coming, but pullbacks are a part of the game. Bidding lower, let's see. So that line there always stands true. When we're pumping or when we're dumping, where we are in the market, we're in a long-term uptrend. Right now, at this very moment in time, we're heading up. In the last 24 hours, we have been up, down, and sideways. Just be aware that as more liquidity, or not more liquidity, as more liquidity, the volatility reduces, but as more players, more retail come into the market, the volatility is going to increase. This week is going to be a big week of volatility. Just be aware of that going on, because it is going to be up, down, probably not a sideways kind of week. This week, people are talking about a retest 29,500. Makes sense. It could come down. It could come down even low, and just psychologically prepare for that. And then it's no drama if it comes down to say 28, 27, 26. You can have buy orders in there, or just stick to your DCA plan. Long term, if you get it at 26,000, 30,000, 35,000, and it only goes to 100,000, that's like turning like $2.50 or $3.50 into $10. Pretty good deal to me. Obviously not financial advice. 8 Fed speakers accompany major macro data week. Markets, so this is sort of what's going on this week. Markets almost unanimously agreed that interest rates will rise again after last month's pause. We can see that here on this chart. The market is pricing in a 92.4% chance we get a 0.25 basis percent hike. Seed, good morning. Good to see you, brother. Saeed, my brother, good man. Real cool people in the chat watching live. So markets almost unanimously agreed that interest rates will rise again. CPI will be followed by the PPI a day later, while a total of 8 Fed officials will deliver remarks on the economy and policy. Volatility is set to return to markets this week. These are all the speakers, and the Wednesday, I believe, is the main one. Now, Bitcoin mining difficulty following hash rate to fresh record high. They're talking about it hitting, so the latest estimate from Bitcoin.com predicts that network difficulty will jump by more than 5%, its largest single uptick adjustment since late March. If we go into this is an incredible thing. Next difficulty estimated plus 4.71%. The hash rate at the moment, 398.4 exahashes. 400 exahashes is the old all-time high, so it's pretty exciting here. A similar story concerns hash rate by which some estimations cross the 400 exahash per second mark for the first time in recent days. Pretty exciting. And then the last thing here, obviously with what was going on in France and still going on there, French authorities have the opportunity now to be able to just actively spy on people. I did retweet this, read that article. They need like a subpoena, or they need to go and get approval from a judge to be able to do it. But it just shows that this technology with your smartphones, they're always listening, they're always watching. Even if you think it's off, it can be on. Take that as you will. I'm just saying that is what's happening with that. Ladies and gentlemen, we'll see you tomorrow. This is the Crypto News with the fast facts. We've got some amazing interviews coming up. Had a really cool one yesterday afternoon. That podcast will be coming out shortly. So hit subscribe if we vibe. We'll see you on the next video. Peace.